Welcome to the market mood. Now, there are reasons for further New Zealand dollar Japanese yen gains over the medium term. Now, let's look at the strength in the New Zealand dollar. The RBNZ met this week. They've hiked rates by 25 basis points for a third consecutive meeting. However, some members saw the decision as finely balanced between a 25 basis points and a larger 50 basis points rate hike. This was a hawkish bias. Furthermore, the central bank's tone was more hawkish as it was prepared to move in larger interest rate increments if necessary. The hawkish tilt was also seen in projections, with the official cash rate now potentially seen at 2.84% in June 2023, whereas previously it was only 2.4%. So the forward expectations are that there'll be faster rate hikes by the RBNZ going forward, and that should keep the New Zealand dollar supported. The Bank of Japan, by contrast, has made a very important move recently by assuring markets they will buy an unlimited amount of JGBs. They've done this in order to keep the 10-year yield within the plus 0.25 and negative 0.25 band on the 10-year Japanese bond yield. What this means is that the Japanese yen should remain structurally weak. Also, inflation in Japan is relatively mild compared to other major countries and still well below the Bank of Japan's 2% target. So this is a key reason why the yen should remain weak. You can also see the bond yield spread. As that moves higher, typically a surging bond yield spread price should catch up to the bond yield spread. So it does look like there's potential gains. We can see here structurally, we have a break of a long-term trend line on the daily chart. This is a probable trend change, and we'd expect the 100-200 exponential moving average to be support, major trade risks. Now, any breakdown in the Russian-Ukrainian geopolitical risk event could see high betas like the New Zealand dollar lose value and strong bids come into the yen. So there could be some snap downside moves in the New Zealand dollar yen on geopolitical risks in the near term, although medium term, it does look like further gains are ahead after the RBNZ's more hawkish tilt.